Welcome to my YouTube channel for episode 2 of tax planning for Canadian taxpayers. Today we're going to talk about tax planning for families and see what experiences I can share with you to help you file your tax return in a better way. But first, these times have been tough for families, especially those who have lower income. So we're going to interview a lady by the name of Cindy Lowen who works for FCSS, and maybe another option for you as a struggling family to get your tax return done for free by an organization of volunteers. So Cindy, tell us about the organizations that are involved in the preparation of these tax returns.
The Community Volunteer Income Tax Program is a collaboration between the CRA, the Canada Revenue Agency, and local community organizations such as FCSS.
So getting your tax return for free, who exactly is preparing these tax returns for us, and can we trust them?
The program arranges for trained volunteers to complete income tax returns for all community members with simple tax situations and modest income.
So let's say I'm an individual or a single person, or maybe a family of 4. Can I get my tax return done by your organization for free? And what are the requirements for me?
We encourage all community members who fall within the income guidelines and the eligibility criteria to access this free service. For example, if you're an individual, one person, the income level you will need to be below is $35,000. If you're a family of 4, the income level you'll need to be below is $50,000.
So Cindy, this is all fine and great for preparing tax returns, but some tax returns are really hard. Are there any requirements if I am not just a basic slip return, or what are the requirements related to that?
The Community Volunteer Income Tax Program does not prepare returns for individuals who have self-employment income, who have business or rental income or expenses, who have capital gains or losses, who have employment expenses, who have filed for bankruptcy, or who may have passed away during the tax year we are filing.
So this sounds really great, Cindy. But is there a limit to how many tax returns that your organization can prepare? How many did you do last year? And is there room for more people to come and get their tax return done?
In Tabor, in 2021, there was 191 income tax returns prepared by volunteers. This equated to $1,614,099 worth of benefits and tax refunds received by residents of Tabor.
Wow, $1.6 million and almost 200 tax returns prepared in just the Tabor area. That's great. These individuals are able to access this system just by meeting a certain criteria. So we can help you guys, your organization can help these individuals get their tax return done and get upwards of $1.6 million into the community. Now, if somebody wanted to see if they could get their tax return done for free, who can they contact? Can they contact you?
The best way to reach me is by either phone or text at 403-915-7063.
Thanks, Cindy, for coming and telling us about the Community Volunteer Income Tax Program here in Tabor. Now, you may not be living in Tabor, even though we're talking just about Tabor. The Community Volunteer Income Tax Program is available across Canada. There's volunteers that are ready and willing and trained to prepare your simple tax return as long as you meet the criteria. Contact your local organizations to find a Cindy in your area so you can access your government benefits and your refund through this tough time. So now let's go through some top 10 things that I've learned in preparing family tax returns over the years. I would estimate I've been involved with preparing probably close to 10,000 tax returns, so I may have learned a few things along the way, but I would strongly encourage you to talk to your advisor before implementing anything that I'm about to talk about, or your investment advisor as well. So some of the things that I've learned are The top one is not prioritizing your savings. Whether it's RRSP, TFSA, RESP, RDSP, there's a lot of numbers or a lot of letters to keep track. Make sure you have an advisor that can discuss which one is right for you. Whether you're early in your career and you should be more into TFSAs, or whether you're later in your career and you should be investing in RRSPs, it all depends on your situation. Another thing I've noticed is a lot of couples put RRSPs in the lower income as opposed to the higher income taxpayer. By putting your RRSPs in the higher income taxpayer, you can get a better deduction and a higher refund. Another planning point would be related to the Canada Child Tax Benefit. These payments are tax-free and are significant, so if your income is volatile and there's ways to plan when your income should be higher or lower, you have to make sure to consider the impact on the Canada Child Benefit payments. Another item to consider would be moving investments into registered accounts. A lot of people put money aside, but they don't take advantage of the room they have either in their RRSP or in their TFSA, and they're earning income outside their registered accounts, and this creates tax. By moving those investments into a registered plan, you can save money on an annual basis. A few more items to consider include not making tax installments. Some people think that by not making your tax installments, you're going to save that money and you won't be charged interest. But unfortunately, CRA knows you should make installments, and they charge much higher interest rates than if you were to put that money in a GIC. Government medical supplements are paid out as a result of what threshold of net income you have. Be aware of those when you have large medical expenses, and if there's planning opportunities, make sure to talk to your advisor about that. Capital gains exemption is a highly technical area as well, and you should access that in your life if you're a business owner, a farmer, or a person that has a qualified farm or small business corp. Talk to your advisor about that, but the implications of not using your capital gains exemption could be significant. The last three items to consider would be whether you or your children are eligible for the disability tax credit. The disability tax credit is a credit that helps you keep money in your pocket to pay for those extra expenses that you will need if you have a disabled person. You need to talk to your doctor and your advisor about how to fill out the forms, and the doctor is the one who assesses whether you're eligible. As an add-on, make sure if you're eligible for the disability tax credit that you talk to your investment advisor about the RDSP, the Registered Disability Savings Plan. This is a powerful account that you can use to save money for a disabled person, and the government matches a significant amount. This account can grow to a large amount in an individual's life and can be used for those extra expenses that disabled people have. A very important item to consider would be to updating your marital status at CRA. A lot of times I've noticed that individuals get a huge surprise if they don't update this regularly, or if they got married or they combined into one family, because when your family income goes up, the benefits, GST, are affected. So make sure you update your marital status regularly if it changes. And also, the final item would be make sure you're claiming your medical and your moving expenses. These are items that you can use to reduce your taxable income. And when it comes to medical, the best and most efficient way to get your receipts for prescriptions is to go to your pharmacist and get a printout, as opposed to saving all those little papers. It saves your preparer a lot of time. Thank you for joining me again for another episode 2, Family Tax Planning. I hope you gained some information on whether you're eligible to access the free tax service put on by volunteers in your area, but also maybe I gave you some thoughts to think about how to file your family taxes in a more efficient and better way. Hope to see you again soon. Now let's go into your community and make a positive difference, and I'll see you back here soon.